Good morning, and welcome to another episode of Exit Strategies Radio Show. I am your host, Corwin J. Millett, broker and owner of Exit Realty Low Country Group in beautiful North Charleston, South Carolina. If this is your first time listening to this show, you, sir or ma'am, are in for a treat because our mission here is very simple. That is to empower our community through financial literacy and real estate education. We're legacy building. That is what we do. So if you're out there making things happen with your family for the generations yet to come, our word teaches us to leave a legacy, to leave an inheritance for our children, and so forth and so on. We want you to put a hashtag on that thing that says that you are legacy building, because that is what you are doing. You can find us on Facebook, YouTube, Anchor FM. You can also find us on Instagram, at our website, exitstrategiesradioshow.com. You can catch us in a number of different places on your favorite podcast applications. We appreciate you listening. Please share this content with your friends, your family, your coworkers, even those in your groups, your church groups, etc., guys, because sometimes the message and the word that we are speaking here today is for you. Sometimes it is for someone else that you know. Again, we appreciate you listening. Let's get started. Good morning and welcome to this week's episode of Exit Strategies Radio Show. As I said, I am your host, guys, Corwin J. Millett. I'm the broker and owner of Exit Realty Low Country Group in beautiful North Charleston, South Carolina. Hey, thank you so much for tuning in, guys. We're going to have an exciting episode today, but we're going to have, as we always attempt to do, we're going to have a very real conversation, guys, about what's going on in our community, what's going on in our area, most importantly, what's going on around us that may in turn affect us here in our area, here in our market. All right. So I want to kind of just jump right into a few things, guys. Now, first and foremost, I'm going to start with quote unquote, what may be for some good news, what may be to others some, oh no. I'm going to start by talking about the fact that Freddie and Fannie Mae, some of you may understand how mortgages, how the financial market works as it relates to the mortgage industry. So we have two quasi, if you will, government entities, Freddie Mac, Fannie Mae, which are essentially warehouses for mortgages. All right. So investors, both the government as well as private sector investors, purchase mortgages, quote unquote, on the secondary market, as we say. So loans are designed a certain way to fit criteria that Fannie and Freddie both adhere to, meaning, so if you give a loan to a consumer and it fits these set guidelines, then Freddie Mac or Fannie Mae will purchase the loan, and in turn they sell the loan off to some investor or what have you. So that's kind of how those things work, and that's how money moves, guys. You'd be surprised at how intricate these steps and these activities are. But that's how stuff happens. So again, the guidelines have to match. So oftentimes people are trying to do a mortgage or make a purchase a certain way. It may not be a loan that conforms to those guidelines, and lenders refer to those as being non-conforming loans. Those loans are sold in other secondary markets, if you will, outside of Freddie and Fannie. If they don't conform to Freddie and Fannie guidelines, limits, etc., then they're sold elsewhere. Okay. So what I want to focus on today, I don't want to go too far into the weeds, because that stuff does get to be complicated and confusing. And you'd be surprised at how many real estate agents have no idea how any of these things work, any of it. I mean, there's a working knowledge, there's an in-depth knowledge, and there's an expert knowledge, if you will. Most don't even have a working knowledge. They have no idea. Wait a minute, what? So you as a consumer need to have an understanding, because when you're talking to your lender and your lender says something to you along the lines of, hey, that's non-conforming, or this is a non-conforming mortgage, you need to understand that somebody is going to buy that mortgage at some point in time. It's very rare that you see banks, if you will, have or hold a mortgage, all right, directly. Some do, don't get me wrong, but it's not as often as it used to be. Long time ago that Banks lent the money out that depositors made. All right. So people deposit money into the bank. The bank in turn lent money out, made interest, and that's how the bank operated. All right. Here we go. Fast forward, we're well beyond the years that loans were started to be made. And now what you have is banks lend money, but then they sell the mortgage off so they can get the money back so they can continue to lend money. So they make money in the fees. The money that's lent out, they charge fees for the processing of loans, for the underwriting of loans. They charge miscellaneous fees for the origination of loans. There's so many different fees or different possibilities as far as fee structures that can be applied. And in turn, the banks make some money there. Then they turn around and sell the loan to someone else. Now, sometimes they retain the servicing rights. All right. So the servicing rights are along the lines of, okay, hey, you got to send your payment to me as the bank every month. I, in turn, process the payment and then I send the payment off, or the portion, I keep a portion as a servicing fee and I send the rest of that off to the investor, the person that owns the loan. And that's how that is done. If there's a collection necessity or issue or what have you, then I, as a servicer, I'm the person that's working to collect the loan. I'm servicing the loan. That's what the term means. Okay. So in that particular situation and scenario, what many consumers miss is that sometimes the bank that's servicing your loan doesn't own your loan. That's just who you're making the payment to. There's another investor, whether it be a private individual, whether it be a private equity firm, whether it be some type of public entity, wherever it may be that have invested and purchased mortgages or a mortgage. In turn, they own the mortgage. They're not changing terms, not doing anything. The servicer has a responsibility of collection, administering, and monitoring the performance of the loan. So somewhat like a property manager, but not quite, but on the financial side, it works somewhat similar. So I kind of got into this conversation. I got into this as some information. All right. So I don't want to go again too far into the weeds and trying to give an in-depth understanding. What I do want to do is make sure that I've given what I'll say is somewhat of a working knowledge. So this is where this gets to be relevant and important. All right. So obviously, many of you, wherever you are, and I know we have listeners, we have people that are listening to our podcast from all parts of the country, all parts of the world. And, if you're looking at real estate in the United States, it works a certain way. All right. It works differently in the United States than it does in Canada, Mexico, other parts of the world where you can own real estate. Okay. Just being frank about it. And oftentimes us these United States, we sometimes think that just because it's this way here, that is that way everywhere. And that's obviously not the case. All right. But we've been experiencing in these United States an increase in our real estate market as far as price goes. We have seen a decrease in the number of available homes. We've seen an uptick in people wanting to purchase a home. And in turn, those two things, when they meet, they affect pricing. So effect on pricing has been to increase pricing overall. So Freddie and Fannie notices this, all right? In order for you to have a Freddie Mac, Fannie Mae loan, there is a loan limit. They don't want big, massive loans. They don't want $1 million loans. I get it. Too much risk in that. That's a lot of money to have out there if something goes wrong, right? So they had loan limits. Now, what is very interesting is that obviously an observation of what is happening in many of the markets where the majority of their mortgages are being sourced, they in turn have raised the loan limit. Yeah, that's huge. I want to slow down right there. I want to say this one more time. They have raised the loan limits for their conforming loans. All right. They've raised them to approximately $625,000. That is huge. Now, that's huge if you're in an area like, let's say, South Carolina. Now, if you're in an area like California, San Diego, San Francisco, Los Angeles, maybe not so much, especially San Francisco, you're not having this conversation like, oh, well, that helps me, because the reality is that the median home price for a home in your particular market or area is probably beyond that. However, when you get into states like North Carolina, South Carolina, Georgia, East Coast, Midwest, Kansas, maybe Texas, things like that. When you kind of get out into those areas, then what you're going to run into is housing prices and markets that price is not that high. So in comparison, what is happening is those areas are being impacted. So they have more options. They have different options. They can now still do Freddie and Fannie Mae loan products for those particular people. All right. And that's huge because again, that keeps the market moving. Now, the reason why I wanted to really kind of point that out is kind of, to be frank about it, along the lines of this. The reality is that the housing market is increasing. These entities that back or insure mortgages are realizing that the real estate market is increasing as far as price goes. And in order to still provide options for people to be able to have loans that don't require 20% down, for them still to have loans that don't require full cash purchase, if that makes sense. And I say loans, it's not a loan if you kept purchasing with cash. But in order for that to happen, there has to be some type of backstop, some type of entity that says, okay, well, look, if you do this, you meet this criteria, you can check these boxes, then I will, you can do this loan program and put 3% down. Because Freddie and Fannie both have what respectively a Home Possible, a Home Ready loan products. And those particular products have a 3% down payment. That's huge in comparison, right? So if you're looking at a home that's $600,000, a 3% down payment is $18,000. But if you had to put 20% down, that would have been $120,000 that you would have to put down to make that home purchase. And to be very frank about it, not everyone has that ability. Now, some of you of our listeners, look, you may have checked out when I said $18,000, and that's okay. I understand. But these are loan limits we're talking about, not loan amounts. All right. Loan limits. So if you're purchasing a home at $200,000, that's $6,000 down. You follow me? So you have the flexibility, if your market and the inventory gives you the opportunity to have a product, quote unquote, in that particular price range. So what we want to do is we want to make sure that we are always vigilant and always seeking to understand, so we understand how to navigate what's going on. Well, I'm always reminded, and I'm remiss to say that, hey, look, guys, we got to come back. We have to make sure, I'm watching, everything that goes on, and how, just personally, guys, I've been in this slow regression, if you will, from social media, because it's unsightly and it's concerning, because oftentimes the information that's being spread is misinformation. People don't know, but they're trying to let you know or tell you how a certain thing is supposed to be. They don't know how Fannie Mae works. They don't know about loan limits, or they don't know the reason there are loan limits. They have no idea about any of these things, but they're trying to help you navigate or instruct you on how to navigate a particular situation or scenario, and it may or may not work for you. Okay, so we want to be mindful. We want to be cognizant of that, because again, this is your financial future. Want to make sure that you are, again, somewhat in the know, somewhat knowledgeable, somewhat educated, if you will, on that in the process. So make sure you're asking the questions. If you're working with a real estate professional who is outside of our firm or outside of myself, my team, my group here, make sure that you are doing that, because you want to make sure that you, quote unquote, are in the know. That's what you're doing, right? All right. So guys, look, we have quickly come up what I'll say is our first, if you will, pause, if you will. Let's put the button right there of the day. Y'all grab flapjacks, y'all flip them pancakes, y'all grab the syrup, and look here, y'all hold tight. And guys, we're going to be right back.
For real estate agents, there's not much financial security. When the only income streams are taking listings and making sales, agents tend to live paycheck to paycheck, spending their commission in advance and rarely saving for the future. You're only as good as your last transaction, and when you stop selling, your income stops flowing. But all over the US and Canada, real estate professionals have discovered an additional revenue stream that fills in the gaps between closings and gives them a financial future that has never existed in real estate before. This new revenue stream is called sponsoring, and it's made possible by Exit Realty. Through sponsoring, agents earn residual income by introducing other agents to the Exit system. It's not a multi-level scheme. It's a proven single-level system that works a lot like it does in the music and insurance industries. You do the work once and get paid over and over again. For example, Mary is an agent with Exit Realty, and John is an agent with another brokerage. Mary thinks that John would enjoy working at Exit Realty too, so she introduces him to her broker, and he is hired. At Exit Realty, he will immediately start on a 70-30 commission split. That's 70% to him. As a reward, Mary will instantly receive a residual bonus paid by Exit Realty Corp. International every time John closes a deal as an Exit Realty agent. Mary's bonus is the equivalent of 10% of John's gross commissions, and Mary's bonus doesn't affect John at all because it isn't paid from his 70%. So if John is producing $50,000 a year, that's a realistic annual income. That's an additional $5,000 every year in Mary's pocket. That $5,000 quickly grows to a much higher number when you start multiplying it. If Mary sponsored, say, 10 people into Exit, all producing $50,000 a year, that's an extra $50,000 a year on top of her own commissions. Now imagine Mary's bank balance if John earned $75,000 or $100,000 a year. It sure adds up. By the way, when John's commission hits $100,000, his commission increases from 70% to 90%. The money is flowing everywhere. The great thing about sponsoring with Exit Realty is that when Mary decides to retire or take a break from real estate, her 10% residuals automatically turn into 7% retirement benefits. Finally, a real estate company that cares about your retirement. For as long as the agents that Mary sponsored continue working at Exit Realty and are closing deals, Mary will continue receiving the equivalent of 7% of their gross commissions. Plus, when you join Exit Realty, you designate someone special as your beneficiary, and should anything happen to you, all of your sponsoring residuals instantly turn into the equivalent of 5% beneficiary benefits, so your loved ones are taken care of. Exit Realty agents get a piece of the action from the 10% sponsoring residuals and true peace of mind from the 7% retirement benefits and 5% beneficiary benefits. So just imagine, if you sponsored 10 people into Exit Realty, each earning $100,000 a year, that's $1 million in your bank account in 10 years. Could you do anything with that? What are the chances of you having $1 million in your bank account doing what you're presently doing? And with Exit, you can be confident knowing that you're backed by a top award-winning brand with world-class training and digital marketing tools. A company that's dedicated to helping you and the agents you sponsor achieve success. Exit Realty is the formula that works. You owe it to yourself and your family to take a closer look.
Guys, and we are back. So we're on the second segment, guys, of Exit Strategy Radio Show. I appreciate you guys tuning in. Guys, you heard we always say legacy building. That's what we're doing, right? That's what we talk about. That's how we constantly focus. That's how we constantly work to engage our community because we want to help you all create a legacy. Legacy is beyond materials, beyond money. It's the wealth, the knowledge, the wealth of knowledge, if you will, that we have the opportunity to accumulate. So we want to help you here in furthering your legacy or creating your legacy if you have not yet started. We want to be encouragement. We want to be inspirational. We want to be motivational in that. We want to assist you. All right. So guys, look, I didn't talk about this before. I didn't bring it back in when we came off the break. But guys, I want you to stay tuned. I want you to look for our podcast here on this station, this radio station. You know, we're on WJNI Gospel, guys. You can catch us on Old School 92, guys, as well. These are both in the Charleston market. But you also, guys, you can catch us on social media, YouTube. You can catch us on Facebook, Exit Strategies Radio Show. I talked about that. But you also, guys, our podcast site is up. You can also grab us from your favorite podcast app, Google Play, the Apple Store. I'm an Apple person. I'm an Apple user, guys, so don't look. For those of you who are Android, Team Android, if you will, look here, don't come for me. But, you know, you can catch us. You can find us there as well. Any of your other favorite podcast applications, you can catch us there. And look, I want you to stay tuned for exitstrategiesradioshow.com. That's our new website. It's going to be live here any moment. So feel free to go ahead and sign in, register so you can get notifications of additions to that website when it goes live. You can go ahead and sign up, if you will, for our newsletter so that we can make sure that you know what's going on with us, where we're going to be, events, all these things that we're doing. Guys, we're also looking for sponsors. We're looking for people who want to help us further our mission which is to empower our community through financial literacy and real estate education. So, guys, I want you to go to exitstrategiesradioshow.com. Go ahead and hit off in there for the newsletter so you can get that information as it comes along. But I want you to stay tuned because you'll have the opportunity to support us. But you also will have the opportunity, guys, the opportunity to know where we are, again, what we're doing in the community, and to help us spread this mission and participate in this mission, if you will, that we believe is of hope and of inspiration and motivation to encourage our community, guys, as we move forward. All right. So that's something that's very big, very personal. And I'm very excited about it because this has been, quote unquote, as the old folks say, this has been a long time coming. Sam Cooke wrote that thing, and Sam Cooke said that thing. Look, long time coming, but a change is going to come. You feel me? So that's where we are right now, guys. And we're super, super, super excited about it. And we want to make sure that we're working towards and working within, quote unquote, our calling. All right. So, guys, before the break, we were talking about Fannie Mae loan limits, kind of giving you a little bit of information on that. And the reason why it's important, because it creates additional opportunities for people to make home purchases. If you're limited, if you have a loan limit that's below what the market is, you can't make a purchase. You got to save longer. It keeps people where they're not trying to be because they can't afford or can't do what they need to do on the next step. Again, think about it. If you are in a market and the Fannie Mae home limits were in the 400s, which is where they were previously, they've raised them up significantly. So with this being said, now you have the opportunity to make a home purchase with less of a down payment than what you would have had to do if the loan limits were lower. Now, granted, if you're a $1 million purchaser, the loan limit increase doesn't quite help you just yet. However, just note that, again, as our market continues to evolve, if we see prices continue to increase, then there's a high probability we will also continue to see loan limits adjust as such as well. So we want to take advantage of that, guys. We want to make sure that we, again, not only have an understanding, but we have enough information that we can operate effectively in that. If you understand the game, then you can play it. And if you understand the game and are willing and able to play, then that gives you the opportunity to win. All right. It's just like the lottery. I got my cousin every day. I see him. I see him go by the house sometimes. And, if I call him, I'm like, yo, what's up? I just got back, man. Just went to play Dollar in a Dream. That's what I'm doing. He's from New York, so he talks fast like that. But can't win it if you don't play it. You know what I'm saying? If you're not participating, if you're not in the game, so many of us have been discouraged by the real estate market overall, prices going up. And we look at it from a standpoint of the prices should come down because I want to buy a house. And I'm going to share something with you here in a little bit because I got to get on the personal side a little bit today as well, because over the past week, 2 weeks, I've encountered a number of individuals who are constantly telling me what other people did. The thing is that, the thing that we oftentimes forget is just because someone else did a particular thing, they did it. It's done. So your opportunity to do the same thing may not be the same. And we have to learn to accept that. Your friend bought a house 5 years ago. Home prices were lower. So they paid this for it. They got this kind of loan. They did this, and this is how it worked out. Wonderful. However, your situation is not the same. You're buying 5 years later. You don't have the same credit, the same income. The home prices, obviously, again, as we started with, are not the same. So nothing else is going to line up the same way that it did for them. And we need to accept that because we need to operate within our reality, not someone else's. You're not that person. So that is something that we need to work on. I actually met with a few people over the past several days, and I've heard this narrative repeated. Just, sat down and had a very long conversation with a prospective buyer, and they were constantly referencing what somebody else did. But in their same situation, what they were not referencing is what they were doing. All right. Oftentimes we are challenged in what it is that we want by our actions. That makes sense? Let's kind of go back on that. We're challenged by what we want by our actions. What I mean by that is the thing that you want requires you to do a certain thing. All right. It requires you to do a certain thing. In turn, if you don't do a certain thing, then you won't get the thing that you want. All right. Yeah. Think about it. Just think about it. I personally, we're having this conversation and trying to educate quote unquote young adults. We have those around. All right. So trying to educate young adults. Look, you got to work. And if you want something, it isn't going to just happen. Your children, I'm pretty sure those of you have these, and I don't know if they're millennials. I don't know the Gen X, Y, all that stuff. I personally don't know how those break down, but millennials or whatever they are, that generation after, they're struggling with certain things. They're struggling with having to work for the things they want. They think, they should have the things they want and just kind of do what they want to do. They really struggle with that. And I've seen some children from, if you will, or young adults from this era that just graduated over the last couple of years. They don't want to work. So they're just home with their parents, and the parents are letting them stay there. And we're challenging that because oftentimes us as parents, we know we're working. So we want a house. So we go out and we work. We put in extra time, overtime if possible to make it happen. We go out and we put in work in other places. We get a second job. We save our money. We cut out the frivolous spending. We do all these things, quote unquote, that many would say as a sacrifice, but we do it with a goal and an intent in mind. But some people, they won't do that. Now they want what they want and expect it's going to be given to them, that it's just going to be ushered in, if you will, that it's just going to miraculously happen. And I'm not telling you that God is not faithful. Believe me, I'm far from the person that would tell you that. But I also am always recalling that, our word teaches us that faith has to have works. Those two things go together. And there's a lot of reference in our word about work. So there has to be some effort put into anything that you want. There has to be work put into anything that you will have. Anything that's given to you most times is not respected and in turn is lost. All right. So you have to make sure that you put in the work that is necessary. All right. And that's something that we all need to focus on and talk about, because we're lacking, if you will, overall in that particular arena. We're lacking in the arena because we don't put in the work. So some of you guys are facing challenges with credit. And instead of you working on your credit, what you're doing is you go do everything else. You run to this program, but they tell you, okay, you need to work on this. And then in turn, well, okay, you go to this program, they tell you something similar, but you need to work on this. Oh, okay. And then you go to this program or this place, and you do this repeatedly. And I just sat down with a young lady who over a span of 12 years, that's what they've done. They've repeatedly talked to someone else trying to find a way to circumvent, to get into a home today, but not addressing what anyone has said to them over the time period, that you need to pay down your debt. You need to stop borrowing, taking out loans to help other people who in turn don't pay you back. And you end up with additional debt because you can't qualify for a house with that debt. That you need to work on making sure that all your income is documented, because you do this little odd job and this little thing here and this, but it's not fully pulled together and documented. Those kind of things are where we find challenge. Just because you want a particular thing does not mean that you will receive a particular thing. And those are the challenges that we face. We are constantly challenged by that. As real estate professionals, we're here to assist you. We're here to guide you. We're here to recommend, suggest, whichever counsel, a number of things. We wear a lot of hats. I mean, sometimes we find ourselves being, quote unquote, the psychiatrist, if you will. I jokingly tell people I've directed traffic. Hey, look, I need you to bark over here. I need you to do this. But all those things are part of what we do to serve people, to provide service to others. So in turn, we want you to succeed. Your plan, your hope, your dream, your aspiration is to own a home, to have a home for you and your family. So we want to help you do that. And we're not going to guide you or seek to guide you incorrectly, because we don't want to derail your goal. However, you must do what you have to do in order for you to have what you want. So you don't get to do what you want to do to have what you want. You have to do what you need to do in order to have what you want. And that's where we want to make sure we put our focus. So guys, look, today's show has kind of been a mix and a hodgepodge of information, but also some inspiration and motivation for those of you who are challenged by what today in this market has brought. Look, as I always tell you guys, look, in closing, we love you. We love you. And guys, tune into us next week. And we love you again. And guys, I'm going to see you guys out there in the streets. Guys, that was a great show today. And we thank you so much for taking the time to listen to Exit Strategies Radio Show. My name is Corwin J. Millett. Yes, that is me. And I thank you from the bottom of my heart for tuning in for today's episode. Exit Strategies is my baby. It is how I give back to our community. It is how I foster goodwill, spread good news, and trustfully help you get great results. Guys, as I always say to you, I love you, I love you, I love you. And we're going to see you guys out there in them streets.